This is a $1 tax return, and this is a $10,000 tax return. The thing you'll notice, they both have the same taxable income. So why is there such a difference in their tax refunds? Well, today, as a tax agent who goes through nearly 1,000 tax returns every single year, I'm going to go through to you the key difference between the $1 tax return and the $10,000 tax return. So let's introduce our two workers. First, we've got Richard Moneybags. He has a government job and pretty much they pay for everything, which that's going to come important later down the line. He also has a side hustle where he earns a little bit of revenue from a side hustle business. Next, we have James Fortune. He works for a big corporation. He actually gets to work from home full time, which again is going to come important down the line. And he earns the same amount of income as Richard does, but he earns it just from this job, whereas Richard's income is split between his job and the business. So what I'm going to do is jump into these returns and go through the two different returns and show you how they got to their refund amounts. So let's first look at Richard Moneybags. So he has that government job, as we said, $130,000 he's earning from it, but he has $49,200 tax withheld, and that's because he's not claiming the tax-free threshold, because he's aware that he has his small business income as well. So that's something to keep in mind, that if you have multiple jobs or you're working as an employee and then you also have small business income, you don't want to double up and claim that tax-free threshold from multiple. He also has some bank interest there where he's earned $50. He has had a little bit of tax withheld there because he didn't have the documentation right with the bank, so they were withholding a little bit of tax for him. He doesn't have any other income besides the small business income. So that's been entered over on his business income sheet, and he had $40,000 of income, but $20,000 worth of expenses. So this leaves him with $20,000 of profit. And that's the key thing. Remember, if you do have small business income, you will only be taxed on the profits. When it comes to his deductions, in workplace for everything. So he doesn't have any deductions to claim except for some charity donations he's made, which have totaled to $4,930, and his charity has sent him a tax deductible receipt for this. He then has $200 that he paid to his tax agent to get his return done. Now, he doesn't have any private health, and because he is over the threshold, he will be paying the Medicare levy surcharge. He also doesn't have a spouse or any dependents. So let's have a look at his estimate. He has taxable income of $144,920. He has tax on that of $38,687.40. He has some non-refundable tax offsets there. He also has his other liabilities, which includes his Medicare levy and that Medicare levy surcharge. So that is something to keep in mind. So he has paid $42,906 in tax. That's between his employment income withholding plus the little bit on his interest, which leaves him with a final refund of $1. Now, before I jump into this second return, something else you can do to better understand taxes is to join my free email newsletter. The link is in the description of this video. Every single week, I drop free tax tips for you guys to better understand your taxes and hopefully get a larger tax refund at the end of the year. I'd love to see you join up. So now let's look at James Fortune. So he earns $150,000 from his corporation job, which includes $50,700 of tax withheld. He also has some bank interest here of $442, and he has had a little bit of tax withheld on that, $28.80. He also gets a dividend here from Big Company, and that's a fully franked dividend. So it's a $2,000 franked dividend with an $857.14 franking credit. So that's something to keep in mind. If you've had franking credits, that's going to count towards your tax paid. He doesn't have any other income. Now, he does have to work from home full time, and he has also had to make one trip for work. So he has paid for some travel expenses here that work didn't reimburse him. He had to pay for the flights, and they cost him $2,000. He also worked from home, and he has done 44 weeks at 40 hours a week, and he's done the fixed rate method of 67 cents, which has given him a claim of $1,179.20. He has also been generous, and he has given $5,000 to a charity, and he also paid $200 for his tax return. Now, he does have private health hospital cover. He's had that for the full year, and he also has 4 dependent children. Now, he does also have a spouse, Joanne Fortune. Now, she earns $70,000, which would push them over the limits for the Medicare levy surcharge, but because they both have private health hospital cover and all their dependents are covered, they aren't eligible to pay that. So let's have a look at his estimate. So he has that same taxable income of $144,920, same tax on that level there. He obviously has some refundable tax offsets. Now, he does have some other liabilities here, which is going to be his Medicare levy. You can see he doesn't have the Medicare levy surcharge. And then the key difference, he has had more tax withheld. So he has $50,728.80, which leaves him with a final refundable amount of $10,000. So even though these two people started with the same amount of earnings from their work plus business, and even though their final taxable incomes ended up the same, their final refunds ended up very different. As you can see, refunds can be dramatically different even if your starting income is the exact same. There are a lot of different things that go into the difference of return. It could be things like private health details, spouse details, dependents, how you've actually earned the income, and then of course the key things, your deductions, how much tax you've had withheld, and your final taxable income. It's why it's so important not to get caught up in comparing to someone else, because your situation might seem the same on the surface, but be very different when we actually dig into the depths of what's actually happened in your tax return. One of the other areas people get wrong when it comes to comparing is they'll compare to their prior year tax return. In this upcoming video, I'll go through some of the key differences of why your return might be different to last year. It's really important to understand, and I hope to see you over on that video.